Good morning, traders and investors. My name is Shen Mwangangi, one of the best market analysts here at HFM. So, what do we expect today? As you all know, today is NFP. NFP on a Thursday. That's quite interesting. And the reason why we have NFP on a Thursday is because we have Independence tomorrow, US Independence Day, and therefore it's going to be a holiday, and that's why NFP was pushed from Friday to Thursday. So, what do you expect from major markets? Starting off yesterday, we'll start with our precious metal gold. Yesterday, we had some news that came out. Let me move to yesterday. Yesterday, we had the ADP report that came out, and it came out worse than expected. We were expecting a 95,000. It came out at negative 33,000. That's way worse than expected, and that's why we saw gold move up and the dollar move down. So, according to our levels yesterday, if you were live at our NFP, at our opening bell on our Instagram page, we were able to call this move from the 336.87, and we suggested that because of the ADP report that signified pressure on an upward pressure on gold and a negative pressure on the dollar, we had that level marked up, and we saw that large pressure move that brought this move on the gold. And when you move to the dollar, we had that pressure to move downwards on the dollar. So today, all eyes are on US non-farm payrolls report for June that is going to be released today at 3:30 p.m. This will be the most significant market move. A weaker than expected jobs number could fuel expectation of a more dovish Federal Reserve, further pressuring the dollar and boosting gold upwards. Conversely, a strong report could tamper rate cuts hopes and cap gold's advance. Other data to watch today includes the US trade balance, factory orders, and the ISM non-manufacturing PMI. But our main focus will be the non-farm payroll, because that's the market mover for today. Outlook on gold. The market is poised for a potential breakout for gold. When you look at gold, let me move to the 4 hours. So the market is poised for a potential breakout from around 33.58 level. Let me mark that level. Around the 33.58 level. That's our level that we're expecting a breakout for today. And between the 358 to 33.90, and that's our potential resistance zone, and a rally towards all the way to 33.422 on the downside. A failure break to break higher could see a retest of support in the 33.22 level and 33.28 area. Trading is expected to be thin also on Friday because of the Independence Day that is coming out. Also on the Forex market yesterday, fundamentally speaking, the US dollar remained under pressure against a basket of major currencies. The passage of a significant spending bill by the US Senate and a general risk-on sentiment in some equity sectors did little to support the greenback as traders focused on the impending labor data. As we all know, Donald Trump is calling this bill the big, beautiful bill, while the Senate are seeing this as they're saying it's big, but it's not beautiful because it has potential of taking the US to a recession. That's what they say. So technically speaking, on Euro USD, you can see how Euro USD has been pushing upwards and taking advantage of the weakening dollar. And yesterday, we managed to push slightly higher amidst, we tried to move down, but buyers came in and pushed higher, and that's why we see this hammer candle. Hammer candle represents bullish pressure, and we were able to push upwards from that level and all the way to the 1.770 mark, supported by broad dollar weakness. The AVP USD held firm above the 1.3700 level, benefiting also from dollars woes. We are not able to break below the 30. Okay, we are not also able to break the below the support at the 1.35690, where we came down showing selling pressure, but buying pressure came in and we pushed upwards, and now we were able to close past this support zone at the 1.36218, and right now we are trading above that support zone. And lastly, on the USD JPY, the pair remains sensitive to risk sentiments on US bond yields. Upcoming today, we all know about the NFP report, which is the main event for the Forex market. The print will heavily influence expectation for the Federal Reserve next move and consequently the direction of the US dollar. The outlook: expect significantly volatility across major currency pairs following the NFP release. A weak report is likely to see the dollar sell off to resume if the report is weak, and pushing pairs like Euro USD and JPY USD higher. A strong report could trigger a dollar rally and inversely bring JPY and Euro down. Traders will also monitor headlines related to the upcoming US tariff deadline for potential shifts in the risk sentiments. As you all know, the deadlines for the tariffs is July 9th, and we'll be approaching July 9th this coming week. Now for the US indices. For the US indices, yesterday, fundamentally speaking, US stock presented a mixed picture. To begin with, the Dow Jones Industrial Average registered gains, then bounced by optimism following the Senate's passage for a major spending bill. However, when you come to the Nasdaq, when I go to the daily chart, when you come to the Nasdaq, the tech-heavy Nasdaq Composite lagged, indicating some rotation out of high-growth technology stocks. The market was also digesting the ADP employment report, which came in weaker than expected, adding to the anticipation for the NFP data. Then upcoming today, the NFP, of course. Today we're just focusing on NFP on all US assets. And this report will be a critical data point for equity investors. A scenario that is not too hot or not too cold, this is called a Goldilocks scenario, could be seen as positive, potentially signaling a resilient economy without immediate pressure on the Fed to tighten policy. Outlook: the divergence between the Dow Jones and the Nasdaq could continue as investors assess the economic landscape. The market's reaction to the NFP data will set the tone for the remainder of the short-end trading week. That's because Friday we're expecting very low volume because it's a holiday for the US. And lastly, coming on oil. Yesterday we saw oil bounce off from the 65.22 level, and we have been consolidating on this level amidst the posing geopolitical tension, and that sharp bounce move from this level was because of the ADP report that came out yesterday, and that influenced the oil to move upwards, but that's not a major move for oil. So today we'll be expecting to look at the NFP to see how it's going to influence oil. And again, if NFP comes out better than expected, signifies a stronger economy for the will signify stronger economy for the US, potentially also allowing oil to move upwards. So those are our key analysis for the dollar, gold, oil, and the indices. Make sure you go and do your due analysis when you're going to analyze your markets. And also remember, this is purely educational advice and not financial advice. You can also go to our YouTube page. Make sure that you like, subscribe, and share. And not to forget, we are permanently shifting from Zoom sessions, and now we'll be doing live streams on our Instagram page, X page, Facebook page, and all our social media platforms. So if you haven't subscribed to our platforms, kindly do. That's where we will be doing our daily morning market call. Thank you for joining us today. My name is Shen Mongangi, the best market analyst here at HFM. Goodbye.